Hello and namaste. This is Neeraj here once again. Uh, just before the uh, budget, uh, I want to talk something to the friends and all these viewers regarding that. As you know, the market has anyway gone up and up and up, and we keep on everybody defying all the odds, and because of the huge liquidity which keeps on coming, and that is good also for the economy in general also. So this video I just want to make an appeal, or give a kind of a, not warning is not the right word, but just to caution investors, just to make them attentive to the government policies also. That this budget exercise, which is an exercise that in India it's kind of a festival exercise, in the sense that so much of preparations made every year, and every year they keep on coming out with something new policies, new taxes, new changes, which is, in my opinion, which is not the right way to do. Budget should be just an accounting exercise, like it happens in almost all the countries. Only in India it becomes a kind of, every time you come out with some new policies, new regulations, new things. It should be an ongoing exercise, not only just for the budget. And also, the more the stable a tax regime or the regulatory regime, the more stable that country is, and the more it attracts investors and investments, and that propels the GDP, that propels the growth and overall economic growth of the country. So in my opinion, this particular exercise of you know every time coming out and like keep in suspense that what will happen, and then suddenly market reacts according to the budget, is kind of very old fashioned. We should change that. We should make more certainty as far as the taxes and regulations and policies are concerned. It should not be a surprise. So in that, I just want to go back to little, why I am coming out with this video is to tell investors and this everyone that you be little careful about, because now is the budget time. On the 30th January, I think, this month end, the budget for the this year will be announced, and there will be. So if you go back to 2017, you will understand that what I am trying to say, that market was at its 2017 or 2018 January, just 2 weeks before the budget. Market was at an all-time high. That time it was at a peak, and suddenly the Mr. Arun Jaitley, late Arun Jaitley, came on the TV, this late finance minister, and he announced a long-term capital gains introduction of that, and the definition. And you see that for 2 years market didn't go anywhere. I mean, it was a very very bad kind of impact on the investors and market. So in current situation also, because of this COVID, the economic suffering, distress happening, and now government trying to recover that, and definitely the government need resources. So there is speculation that government may come out with some kind of a new taxation regarding the long term capital gains and short term capital gains. And there may be some changes in the definition of short term capital gains. They may extend the period of what is considered to be a short term capital gains, let's say from uh, from 12 months to more than that. So and they may even tinker with the short term capital gains in the tax rate of that. So that is one warning, or one thing which needs to be keep in mind to all the viewers and the investors, that one should be aware about this, that it may happen. I am not saying that it happen. Nobody knows that, but there are chances that it may happen, and it can, if that happens, that can wreak havoc in the market, and it can derail even India's growth story, and and the faith of the investors in the India investment story, basically. So that is one my point to be noted for the investors and viewers, and also for my appeal to this government, if they are watching or listening in somehow, if it may reach, that don't tinker with the market and related tax rates. And also don't try to impose some new tax like wealth tax or something like gold tax, or that precious metal tax. It's not going to help you garner much resources, but what it will help is that it will move away investors from India, and also it will destroy the faith of investors into the India investment story. So my earnest appeal to all the investors and viewers is also that one should keep this in mind. So these are the 2-3 points, like not tinkering with the long-term capitals and short-term capital gains tax regime, not tinkering with any new tax or the wealth tax or the gold sovereign tax, that kind of a tax. Property tax, something new. Don't do that. You can increase your fiscal deficit, but don't tinker with the tax rates. India is already a high tax regime, high cost economy, and as such, if we want to compete with the world, and we are inviting all the manufacturing and investments into India more and more, this kind of policy changes will not augur well for India. There is always an argument by those so-called leftist or this economist conservatives that you should tax reach, and this market is a speculation, and it doesn't. So you should. It's a very easy money for the speculators, and why it should not be taxed, and why government should not take money from that also. So that is a bullshit theory in my opinion, because even if you look at the Bhagavad Gita's philosophy, or what the Hindu philosophy says, that whatever as per your karma you get it. Okay, so if somebody is making money, he is also investing his time and resources, and he's taking that risk, and that's why he's taking that. He's making the money. If somebody is making whatever, so it is as per the karma, as per the work. It's nothing is easy. Even making money is an art from the market. To somebody. And as far as people talking regarding that this is an investment, this is a speculation, market is just bubble. Yes, I may agree that there may be a bubble always. Any asset bubble can start forming, but you cannot just dismiss market as a speculation, because market is a lead indicator. Whatever said and done, we like it or not, world over, the stock market has always been a lead indicator. It gives you the things which are going to happen. Okay, so it gives you the early signs of what is going to happen. So when market rise also, you saw the how fast recovery started happening. So that is a kind of a sentiment, and the more the bullish sentiment or the market in the optimism is there, it will create more optimist environment, and people start investing, people start coming out with the projects, banks start lending. So that is what it's a virtuous propitious cycle which happens. So market, never dismiss market as a speculation. It's a lead indicator. Okay, so this economist, they may go wrong and all these things, but market doesn't go wrong. So that is my earnest appeal, is that don't, to the government and the regulators and all these agencies who are busy in making this budget, don't please tinker with the tax laws. Don't tinker with any new taxation for the stock market, like long-term capital gains, short-term capital gains, wealth tax, sovereign gold tax. Don't do anything of this. Otherwise, you will wreak a high-speed bullet train. Just put a brake, and what happens when the vehicle is going at high speed? So India's economy is going at a very high speed. It's super, and it's good that don't put a brake on it. Otherwise, it will dismantle everything. Even manufacturing and all these new investments are coming, it will just stop, and market can come back to this March level. Oh, what happened after that COVID news, when everybody knows that. So this is just a caution, or can say that just I wanted to give investors this kind of a, that this, please keep this in mind, and also to the government, that they should not do anything to wreck India's investment story and this market, this movement fast. That's it from my side. And if you like, you please put a like on this video, share it with your maximum friends, and you please subscribe to my channel if you have not yet subscribed, and put a notification button. That's it from my side. Ciao from Neeraj from Moscow. Bye.